So it's been a while since I've done a Robinhood portfolio update, and I thought now is a good time to show you guys what changes I've made to my portfolio and some of the stocks and ETFs that I'm currently investing in. And I know that some of you might have a few questions about my positions and the stocks that I own. I know some of my positions might seem a little weird or way too risky or whatever it might be. If that's the case, feel free to leave any comments or questions down below. All right, so let's pull up my Robinhood portfolio and we'll start with the total account value, which is $36,790. And for those of you who don't know, I add anywhere from $500 to $1,000 a month into this account. And this is currently my only investing account. I know it's probably smart to have more than one, but since I don't have a crazy amount of money and I only make a few $1,000s a month, for now all of my investing money is going into Robinhood. Like I mentioned earlier, I did make some pretty big changes to my portfolio and ended up selling a good chunk of my stocks, mostly because of all the banking drama that went on a few weeks ago and the Fed just continuing to increase rates. There was just so much volatility in the market that I decided to sell out of a few different stocks and hold on to some cash instead, since I'm getting over 4% in interest. I just thought it's probably better right now to decrease the risk in my portfolio and have a nice cash pile to sit on for a few months while the market is just jumping up and down. I currently have about $11,000 in cash, accruing that nice 4% APY. I think it's a little more than 4%. So now let's check out some of my stock and ETF holdings. I'm pretty flat over the 1 month period, down about 1% or $400, but year to date I'm up 2% or about $750. Starting with my biggest holding, it's PBRA, and I won't go too deep into this one because I recently made an entire video about it that you can go check out on my channel. But with this stock, I'm basically just shooting for those high dividend payments this year. Last year it paid out about 75% in dividends. And the dividends this year definitely won't be as high as they were last year, but I'm expecting the dividends to essentially be high enough to hopefully make this investment worth it. And really those dividend payments are going to depend a lot on what oil prices are doing this year. So if oil prices stay high, those dividend payments should be pretty high this year too. It's a very controversial stock. I'm definitely not recommending this in any way. I'm just personally bullish on oil and gas this year, and I've always been interested in dividend paying stocks. So we'll see if this investment ends up being worth it. Moving on to the next one, Costco, which currently makes up about 10% of my portfolio or just under $3,000 invested. And my total return is completely flat at the moment. I think Costco is one of the oldest holdings in my portfolio. I think I've owned this the longest, and it's definitely a long-term hold that I'll keep for as long as possible. I should be adding a few more shares this year, and I'll be holding for the next however many years. This next one is Quanta Services, or PWR. This is an electrical energy infrastructure company. So they're constructing and maintaining really any type of infrastructure that produces electrical energy. And they also own a bunch of smaller electrical companies too. It's definitely a momentum stock. It's just been crushing it for the past few years now and should continue to do so for the next few years as well. So I currently have about 12.7 shares or $2,000 worth and a total return of 8.7% so far. The next one is basically the same type of company as Quanta. It's Wesco International, or WCC. As you can probably tell by now, I'm pretty bullish this year on energy stocks. Plus, Wesco stock is considered fairly undervalued as of right now. According to Morningstar, its fair value price is around $189, making it currently trading well below its fair value. So I'll most likely be adding a good amount of shares this year to both Wesco and Quanta. But something I'll need to keep in mind though is how volatile this stock is. As you can see, it tends to rise and fall pretty significantly. So that's something I'll definitely have to watch out for as I'm adding more shares. And as you can see, I'm currently down about 10% on Wesco. Another similar company that I own a few shares of is Dycom, or DY. I'm down about 4.4% on this one with 4 shares. This next one is TORM, or TRMD, a very risky stock, but it's been picking up some steam this year and it has got some solid momentum. In my opinion, has the potential to grow another 30, 40, 50% this year, but that's just my opinion, of course. And again, a very risky stock and very high volatility as well. Enphase Energy is the next one, another risky and high volatility energy stock. So this company develops microinverters for solar energy products. It shot up these past 5 years or so, gaining over 4,000%, but it has been dropping pretty significantly this year, since the beginning of this year. So my total return is a negative 15%, but I'm planning on holding at least for another 2 years or so just to kind of see what happens with this stock. Again, very risky, pretty speculative too, so we'll see with this one. Moving on, we have Arthur J. Gallagher, or AJG. I have about $800 in this stock, and my total return is about 12% so far. This next one is Cintas, or CTAS, probably one of my favorite stocks to invest in and a great long-term hold. I have about 3 shares of Cintas, or $1,300, and I'm up about 9%. I'll most likely be adding a few more shares going forward in the near future here too. XLK is the technology sector ETF, and I actually just sold a few shares of this one to purchase shares of Apple. I don't really know why. I'm sure I had my reasons at the time, but I had been putting off buying shares of Apple for a while, probably because I own XLK. But after a few years of debating on whether or not I should, I finally decided that it's time to start buying into Apple fairly recently. And yes, I know I should have been buying Apple shares from the beginning, because if I would have done that, I probably would be up like 150% by now, but it is what it is. So as you can see, I have about 3 shares of Apple, or just under $500, and I'm currently up about 4.5% with that little recent rally we had. Now, kind of getting into the ETFs that I own, we've got the QLD ETF, which is a very risky leveraged ETF that is 2x the exposure of the QQQ or the NASDAQ. So whatever the QQQ returns, this ETF will return double that, whether it be positive or negative. So pretty high risk, especially in this environment, but I'm currently up about 16% with a little over $1,200 invested. Moving on, we have SCHG, and this is probably one of my favorite ETFs because it has a good amount of risk and reward, but not too much to where you're losing everything when the market turns downward. And I think it's just a great long-term buy and hold, especially if you're a little bit younger like me. And this year I'm planning on adding a few $1,000s more into this ETF and just continue to keep buying and holding for decades to come. This next one is SPYG, SPYG, and I actually might just end up selling out completely out of this one and putting it all into SCHG, since they're basically the exact same ETF. Next we have a Warren Buffett stock, OXY, Occidental Petroleum, 3 shares on this one, and I'm up about 8% there. Star Bulk Carriers, or SBLK, another pretty high risk but high dividend yield stock, similar to PBR. 6 shares in this one and down about 2%, but it's still paying about a 25% dividend, and I recently got paid from this one. I think it was about 60 cents per share, and at the time I owned 10 shares, so I got paid about $6 in dividends. This next one is Builders First Source, or BLDR. This is a building company that provides the materials for the construction of homes, and they actually have a location here in my home state of Utah. So I own about 3 shares of this one, and I'm up nearly 24%. The last few I don't think are really worth mentioning because I only have about $100 worth of each, but I will jump down to the bottom here to my dividend paying ETFs. And these 3 down here are some that I talk about the most on my channel because they're simply some of the best dividend ETFs to own, in my opinion. So starting with JEPI, I've got about 14 shares, or $760, and I'm down about 3% on this one, but I did just get a nice little monthly dividend payment of $6.23. And the other one is JEPQ with 10 shares, or a little over $400, and I'm up about 1%, and I also just got a monthly dividend payment of $4.54. The last one is SCHD, which is probably one of the most popular dividend ETFs out there right now because of its super low expense ratio and its annual or compound annual growth rate. So all the finance YouTubers are talking about it right now and have been for the past year or so, but I own about 2 shares of this ETF, and since I haven't bought many shares in a while, I am down about 7%, and I recently got a dividend from this one as well, and it was $1.19, or 59 cents per share. So one little quick story, I was actually watching a video just like this one. I like to watch videos like this too, just to kind of see what people are investing in and how much they're up or down in their portfolios. And it was kind of interesting to see. I don't remember who it was. I don't remember her name or anything, but she was up like 30% year to date. And I was wondering how she did it, but it turns out she had like 60% of her money in Ethereum, and Ethereum was up 40% year to date. So then I started questioning, like, what am I doing wrong? Why is she a better investor than I am? So I was like kind of comparing myself a little too much and second guessing my positions and things like that. But then I realized that I probably would never put that much into crypto, or into crypto at all. So the point of that story is really just to focus on your own portfolio and continue to do what works best for you and decide for yourself how much risk you're willing to take on. Also, one last thing, I'm hopefully becoming a monetized YouTube creator here in just a few days if everything works out. So going forward, I'm really going to try to update you guys on how much I make from YouTube ad revenue each month as well, on top of the Robinhood portfolio updates. So make sure to subscribe if you haven't already, and feel free to leave a like on this video if you enjoy my portfolio updates, and I'll see you guys next time.